Here we are, guys. Today is Thursday, August 21st, and let's take a look at what Nasdaq might do this morning and this afternoon. As we saw yesterday, if you watched the video, the area I pointed out for the short from here down to the VPR. On the 4-hour chart, which I've now deleted, you saw how it was a pretty solid trade, and we also had the options zones for yesterday. So if you followed my advice to enter with a small position on this fair value gap on the 1-hour chart, did you catch it? Definitely a trade worth at least $1,000 to $1,200. Of course, it depends on what size you used, but there were a lot of points, okay? It was almost 130 points made in 6 to 7 minutes. So I'd say it was an excellent trade that I took on both accounts, so I consider myself satisfied. Alright, let's start with the 4-hour chart, okay. Then we'll also take a look at the zones. Options, right? Alright, let me mark this down real quick. The BPR, okay. This was a BPR. I'll mark it anyway because I want to see if it was respected. Then again with the long, okay. Once we broke it again. As you can see, anyway, the price dropped and reached the second zone. Options, it took this liquidity, which was also this whole fair value gap, on the 4-hour chart, and the price started to retrace. Now, before we go look at all these zones, okay, which are still very valid for the long, let's take a look in here, okay. I can also temporarily delete these things here. No, there's the fair value gap there that's holding, okay. So, let's take a look in here. What could the price have done? First of all, let's see that there's this small fair value gap that's holding. This is a 4-hour fair value gap. And you need to understand that when the fair value gap, once it's broken, it gets flipped. But how does it need to be broken? It needs to be broken with the body. And now you might say to me, yes, but let's take a closer look at this candle. No, okay, but this candle didn't close above, guys. Because when there are these wicks and then the price goes back to close inside, we haven't had acceptance. We haven't had acceptance. What does that mean? It's as if this fair value gap has widened up to this level. If this wick had reached up to here and then closed back inside, unfortunately guys, it's as if the fair value gap was this big. Okay. So it's really important to understand whether we have acceptance or not. This rule works both on the stops and from 1 minute up to the daily, even the 4-hour, any kind of time frame. To have acceptance, the body must close above the previous wick, even if the fair value gap is big. Like this, okay. So at this exact moment, we still haven't had anything. What does that mean? It means that it's still not really clear yet. We're talking about the 4-hour level, of course, whether this fair value gap has actually been broken or not for now. So we also have this fair value gap, and this one here is the first fair value. We need to keep it because it's a confluence for later. We can see that right now. When we drop down to a lower time frame, we can do that right away. We're in accumulation, so let's mark it. Let's mark this little line here, and we'll keep it long up to this level, because it's not our liquidity, it's our fair value gap. On the 1-hour chart, I'm going to mark it just like this because for now I'm keeping the 4-hour one, but as you can see, there's this huge one. 1 hour, okay, so if we want to be precise, it actually goes up to here. So we can still see how the price could keep moving, since you clearly understand which move is in control. It's this one. No, this is our reference range, so we're still short, even though we've hit the OT zone and yesterday we hit some really nice areas, we hit the zone. OT, we grabbed the liquidity, so it's possible we go long today, but for now, guys, the price is still short. Let's also mark this 1-hour fair value gap down here, because it was respected. And I'm really interested in this, so we can see how, probably, I say probably because we're not there yet, the price could just range like this all morning, until the New York morning open. Let's go straight to the 15-minute chart. Can we take a look? This is the first fair value gap, which we'll mark in a minute, because it's of interest to me. Absolutely, because it's yesterday's fair value gap that hasn't been mitigated. So I actually like this area. I don't mind it at all. We can see how, on the 15-minute chart, this fair value gap is holding up the price. It doesn't even need to be mitigated because it's right. It's perfect. It did take some liquidity, but as for taking off, so technically the only thing that what I would see to do for now, if it wants to keep going long, is to go grab all this liquidity and then take off again. Unless, of course, it just takes off right away. But we'll look at that later when we get to the trades. Let's move to the 15-minute chart. Still, guys, nothing of interest yet. Our reference range is this one. We're long, and we have some pretty significant liquidity here. This one was taken, and it was New York afternoon. And now let's mark all the other liquidity levels. Okay, so let's switch to the 5-minute chart and see how the Asian session was technically taken. No, not yet. Okay, perfect. So we have a good area to target. Also the Asian session down here. Okay, very, very interesting. I really like these levels here. This one is at 2025. I wanted to check if it was still there. We also have the 1930 level, the New York afternoon down here, which we're going to mark as well. This one, since it's still outside, is a liquidity level that the price could definitely reach. And now I'd say that for the moment we've looked at everything. Let's take a minute so I can show you this first fair value gap from yesterday that hasn't been mitigated. Guys, here it is. You can see it when the price took off. So I'd really keep an eye on this area. We also have the market open at this level, which we'll mark right away. So we have some pretty good confluences for a possible long position. Let's also immediately mark yesterday evening's close. Okay guys, because it's important to see, based on 3:30, where they open, whether they'll open with a gap or not. Alright, so let's mark it down. We'll mark this one too, as always, in a different color, so we don't get confused. Let's go back to the regular extended hours and we can see where the price started to, let's say, reverse. So there's already an initial sense that the price, once it managed to rise above the previous day's close, which is yesterday's market close, the price hit right up against it, then started moving again with the long trade. Now let's see what the price might do. Technically speaking, guys, this is our reference range. We're still short because we'll go long above here, okay? So technically, I'd like to look at two trades between this zone and this zone. The first trade I'd recommend, which I also think is the more interesting one, is as soon as the price starts moving long. I'd leave out the Asian session for now, because honestly I don't trust these zones. We might see the hourly fair value gap close, but that would be afternoon, so after the new 4-hour candle. So let's look at this area here. If they grab something, let's watch for the mitigation. Then, possibly, a short with the first partial at midnight. After that, we move on to the internal liquidity until we go straight to the Asian session. Okay, why am I saying this? Because even if the trend is long, this move is in control. So, until we go above here, my outlook stays short. Let's do the opposite trade. Instead, I'll show it to you in another color if the price happens to drop. So it leaves out both of these very important areas. Guys, it leaves out both zones. I would actually look for a long from the Asian session, possibly to go up, or if it drops a bit more, to grab this liquidity down here and then try for a long, okay, for the time being. Guys, these are the only trades I see right now. The other possible trades, logically, are in the option zones, where down here we could look for reversals, okay. So, the usual retracement at this level, the usual retracement at this one, possible reaction in the options call zone 1, or a possible reaction at 0 DTE2, okay? These are the possible trades for today. We're seeing a strong downward move, we're retracing, and it's not looking great. Okay, the chart doesn't look great, because honestly, guys, the chart could also just go straight up long. Do something like this. And honestly, as far as the London session goes, we can't really take any trades for now. I'm expecting some accumulation, and then we'll see what opportunities come up. Okay, now let's do a recap of our possible trades and then we'll take a look. I'll also give you the zones. Specific options. Alright, so the first possible trade is a long from the Asian session or possibly from 7:30 p.m. to look for potential zones, options. So we'll be looking for a breakout of this move. The second trade is also a long. We'll leave that aside and go for the short, possibly when, at the close of the fair value gap, the mitigation of the first fair value, to possibly take, guys, an option zone below that I don't really like. Okay, honestly today I see more of a long, okay? So I would expect more of an accumulation, then a move to take a trade, some manipulation, and then a distribution for another long trade. The other possible trades, as always, are reversals in our zones. Options. Okay, now I'll give you the zones, options exactly. So let's start then. The first call, 1 or 0 DTE, is between 23,480 and 23,500. The second call, we have at 23,580 and 23,600. As for the puts, the first put is between 23,090 and 23,060. And the second put is between 22,880 and 22,860. Okay, I haven't marked the SP ones yet, but let's do that together now. Okay, so let's go to SP, erase yesterday's ones, and mark them together. We're on a 15-minute chart. So, the first call is between 6,450 and 6,460. Alright, so 6,450. And 6,460. And that's the first zone. The second zone goes from 6,490 to 6,005. So, 6,490 and 6,005. Now let's move on to the puts. The first put is at 6,365, 6,365 and 6,355. What do you have? This is the first put. The second put is between 6,200 and 6,305, 6,305 and 6,295. Okay guys, let's go back to NQ for a moment. I'll give you the overall picture. We're short, so obviously the short side is in control. But today, I expect it to be a bit more long than short, we'll see. So that's all for today, guys. I remind you that if you like our content, a like, a comment, any interaction on the channel really helps us a lot. Also, remember that tracking and calculating trades involves calculations, many of them complex, with gamma, with volatility, and you need platforms that, altogether, cost quite a bit. More than $500 a month. Now, we're giving all of this to you completely free, so I think leaving a comment, a like, or even following us on the channel is the least you could do. It really doesn't cost you much at all, and honestly, by doing that, you help us out so much. And every day, we'll keep bringing you these option zones or 0DT for free. So that's all for today. A big hug from your day, and I'll see you tomorrow. Bye guys.